Hi everyone, my name is Piterpakulski. Today we will continue building financial model for a bakery. So we continue talking about small business ideas. And today we have a very interesting and very important topic. We are building the cash flow. So we need some environment where we will be able to see the structure of all the revenues, of all the expenses. We need some table where we will be able to see how much financing we need to start the business. We need some environment where we will be able to calculate the profitability of our business idea. So for all that purpose of, if we need to calculate simple discounted payback period, for all that stuff we need cash flow statement. So today we will be building this very important table from scratch. Like, share, subscribe. You can also order financial models from scratch for your unique business ideas. We can help you with that. As usually at the end screen of this video, I will give you the link to the playlist where I will be keeping all these tutorials. And when I finish this model, I will give you all the links in the description of this video as well, so you may watch all tutorials from the first till the last one and build your own models from scratch. So first of all, let's very quickly run through what we did before during previous tutorials. So we have the unique rule through the whole financial model saying that all our inputs are marked with this blue color, like this, like this, like this. So all these cells are inputs. Other cells like this, like this, like this, they contain formulas, so we are not touching them during scenario modeling. So we are only playing with blue cells, building different scenarios. So here we have the list of breads and cakes that we're gonna sell. Then here we can switch them on and off from calculations. Here we specify the monthly sales plan. We have global and local coefficients to increase and decrease the amount for sales plan. Here we have the pricing table. We have global and local coefficients for pricing, so all these global and local coefficients will later be needed during scenario modeling, stress testing, so we will need these a few steps ahead. Then we are moving forward. Then we are assuming that we have 5 types of customers. We are allocating the revenues between these types of customers. We specify the average check for each type of customer. We can switch on and off different customers from calculations to see what will be the simple discounted payback period with or without different types of customers. For example, if we are too optimistic with this or that type of customer. Then we have the list of ingredients which play part in producing this or that bread, cake, and so on. So these ingredients are for these cakes and breads that we are producing. These are the pricing per unit of this ingredient. We can switch on and off different ingredients from calculations, and we have global and local coefficients for ingredients for future scenario modeling to see what will happen if some ingredients will grow or some ingredients the price will decrease. So for that stuff we have these coefficients to avoid playing with the inputs themselves, direct inputs, so we can save a lot of time. Then here on the next tab we have, from top to the bottom, we have the list of products that we have. From left to right we have the list of ingredients that play part in cooking this or that breads or cakes. And here in this area we're specifying the consumption of this or that ingredient. In cooking, 1 unit of bread, of this or that bread, that cake, and so on. So for example, for bread type number 1, we need 5 units of ingredient number 1, and we need 8 units of ingredient number 15 to cook one bread type 1. Then let's get back. So what is next? So then we are specifying when we start the operating activity, when we get the first revenues, month and year. Then we are specifying for each type of customer how fast we are reaching the target revenues that we planned before. So before we were specifying the target revenues, and here in this table we can specify how fast we are reaching these target revenues. And this is very important block of input, because specifying these numbers, these percentage values, we may be able to see the operating losses that you will additionally need to finance to start your business idea. This will increase your amount of financing that you need to start your business idea. So playing with these inputs will show you some additional need of financing for your project. So this is a very, very important block. Then we start describing fixed expenses. We have a year for them, and here we specify if they have some seasonality algorithms. We can put these algorithms in this block of inputs. We have global and local coefficients for fixed costs, and we can switch each of them from calculations to see how each of them affects cash flow, simple, discounted payback period. Then we have the payroll, we have the list of positions, we have the salary per person in one position, we have the amount of people on each position, we have global and local coefficients for salaries, and we have on-off switcher for each position to see how this position affects the cash flow. Now we are moving to investment plans. So here we specify what we are investing in. Here this is the timeline of the investment plan, and here we specify how much we are investing in and when. So this is how much, and here we specify when. These are global and local coefficients for investment plan. We can switch on and off different investment plan items from calculations. Then we start talking about the loan. Here we specify the amount of loan, term of loan, interest rate, when we get this loan, month and year, grace period for principal payments and interest payments. And now let's move to the cash flow. So cash flow is a table which is 100% automated. So we're not putting any data here manually. To avoid mistakes, we will be linking all the revenues, inflows, outflows from the area that we've built before during previous tutorials. So let's call it cash flow. So we're starting with revenues. And what we're doing now, we're just going up, searching for the green lines which represent the revenues. So these are the revenues. Now we are creating totals for the revenues.
Now we are moving to direct costs.
So I'm going up, so I'm not putting any data manually in this statement. So direct cost, I'm pulling this data. Now we are moving to the payroll. So I'm just traveling up. So we can see here the payroll. Now we'll extrapolate this formula to the right. Now we are moving to the fixed costs. So here they are. So I'm just here in this video, I'm just searching for red lines and green lines to consolidate all the inflows and outflows. Now we are moving to taxes. For taxes, let's create a small block of inputs. So the first tax, for example, will be revenue tax. The next will be, for example, salary tax, payroll. Then, for example, we'll have profit tax. Then, for example, we'll have asset tax. So these are the inputs, so I'm coloring it with blue. So revenue tax, for example, can be, let's say, 5%. Just a second. So this will be 5%. Then payroll, for example, can be 7%. Then profit tax will be, for example, 4%. And for example, asset tax can be, for example, $5,000 monthly. So now let's add these taxes here. So the revenue tax, we're taking the revenues, multiplying the tax rate, freezing this rate, then payroll tax, we are taking the payroll value totals multiplied on the tax rate, then let's keep profit tax for now, we will get back to it soon. Asset tax, we will take this value, and then we will multiply it on the line inside the timeline table, where 0 means that we don't have operating activity and 1 means that we do have an operating activity at this moment. So this is the project timeline table, operating activity 0, 1, 1. So we are taking this line and we are pressing enter. Now let's extrapolate these formulas to the right. And now we're moving to the first important line inside the cash flow. This is the result from operating activity. This is how our business breathes itself without external burden like loan and so on. So this is the first important result from operating activity. So we are taking revenues minus direct costs minus payroll minus fixed costs minus taxes. And now we're extrapolating this formula to the right. Now let's move to the next block, the investment activity block. So investment, as usual I'm traveling to above to the model. I see the investment plan, red lines, and I'm picking these group of lines to the cash flow. The next important block will be result from investment activity. I will take this total with minus sign because in our case the investment is outflow, so minus this line. Now I'm extrapolating the group of these formulas to the right. So this is the investment plan. Now we are moving to financing activity. So the first line is our money from our pocket. Then we have the loan. Then we have interest payment. Then principal payments. So equity will be maybe the only input that we have inside the cash flow. Later we will automate it as well. Then we are picking the inflow of the loan when we get it. Then we are picking interest payments, interest payment, principal payment, and here we have the third, it's the most important thing, line in cash flow statement, the result from financing activity. And this will be this line plus inflow of the loan minus interest payments minus principal payments. Now let's extrapolate these formulas to the right. Let's color it with yellow. Then we can get back to profit tax. So and now let's write the formula. So if revenues minus, so we're giving the definition of for the text base. So for the profit tax, so if the revenues minus direct costs minus payroll minus fixed costs minus revenue tax minus payroll tax minus asset tax minus investment minus interest payments minus principal payments. So if this tax base is less than 0, less or equals to 0, we will put 0, otherwise we will take this tax base and multiply it on the tax rate. So payroll profit tax. Now let's press enter. Oh, we need to close the brackets. So profit tax, let's extrapolate it. Okay, so this is the profit tax. Now let's create a new line and call it cash balance at the beginning of period. So here we will have 0 for the first month, then cash balance at the end of period, and this will be the result from operating activity plus the result from investment activity plus the result from financing activity plus cash balance at the beginning of the period. Now this value now becomes the cash balance at the beginning of the period for the next month. Then we are extrapolating this formula to the right. And now let's just extrapolate these cells to the right. So you can see how this value becomes the beginning balance here, this becomes the ending balance here, and this moves like this. Now let's extrapolate this formula to the right. So now we are done with the cash flow statement. What we can do now, we can just try to hide these group of lines, data, outline, group. So now we can hide all these lines. So now we can see our cash flow statement collapsed. So we can dive into details like this. And the topic of our next video will be financing of our business idea. So I hope you enjoyed. Give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. At the end screen of this video I will give you the link to the playlist where I will be keeping all these tutorials. And when I finish this model completely, I will give you all the links in the description of this video as well, so you may watch all tutorials from scratch absolutely free. So thank you guys for watching, see you next videos, thank you and bye.